Crypto is tricky, and so is the tax landscape related to it. In the UK, the HMRC, His Majesty Revenue and Customs, has set out clear tax rules for cryptocurrencies, while also bringing into action some significant changes in the crypto tax laws, such as the annual capital gains tax (CGT) allowance. Therefore, investors and traders new to crypto can get tangled with the tax laws and might end up paying more tax without strategic tax planning. But fear not, we've got some strategic methods to help you keep more of your hard-earned profits. So, in this video, let's see some methods using which you can legally avoid your crypto taxes in the UK. Segment 1, Tax-Free Threshold. One of the best answers on how to avoid paying tax on cryptocurrency in the UK is to use the tax-free threshold set by HMRC. In the UK, we have the annual exempt amount AEA for capital gains tax. For the 2022 to 2023 tax year, it's £12,300, but be aware, it's been reduced to $6,000 for financial year 2023-2024 and £3,000 for FY 2024-2025. Pair this with the standard personal allowance of £12,570 unless you earn over £100,000, and you've got a good start to minimize your tax liability. But there is a catch. If you earn more than £100,000 in a financial year, your tax allowance will be reduced, while earning over £125,140 makes you ineligible to receive the CGT allowance. Segment 2, Harvesting losses. Harvesting your losses to offset capital gains sounds unbelievable, right? But it's not. So there are two types of losses: unrealized losses and capital losses. An unrealized loss occurs when the market value of your crypto assets drops below your purchasing price, but you have not sold it. On the other hand, a capital loss occurs when you sell, donate, spend, trade or gift crypto assets for less than what you paid. So if you've got unrealized losses in your portfolio, consider disposing of those assets at a loss to offset your capital gains. Just be cautious of the wash sale rule, which means buying back the same or substantially similar assets too soon won't allow you to claim those losses. Segment number 3, trading and property tax breaks. The third method to avoid tax on cryptocurrency in the UK is by utilizing trading and property tax breaks. These two separate allowances allow you to earn up to £1,000 each from trading and property income without paying any tax. But remember, you can't use one allowance to cover the excess of the other. This is a straightforward way to reduce your tax liability, especially for those with smaller investments. Segment 4, investing in pension funds. Now, if you're ready for a long-term strategy, you can make the best deal in the form of a pension fund, such as a self-invested personal pension (SIPP) or an individual savings account (ISA). With tax relief on contributions, you can contribute up to £40,000 annually in a SIPP or up to £20,000 in an ISA. But you will have to be very cautious of fees and market volatility. For instance, you may have to pay fees to open and maintain these accounts and face penalties for early withdrawals or transfers. Also, not all crypto platforms are ISA compatible, and you may have to use a third-party service to invest in crypto through an ISA. Segment number 5, making crypto donations. Supporting a good cause while reducing tax liability. Doesn't it sound too good to be true? Indeed, you can reduce your taxable capital gains by the value of your donation and support a good cause. According to HMRC, crypto donations are tax deductible in the UK if the donation is not greater than the cost of acquiring the crypto. For example, if you bought one BTC for £10,000 and it is now £40,000, you would have to pay a CGT on the £30,000 gain if you disposed of it. However, if you donated that one BTC to a registered charity, you would not have to pay any tax on it, and you would also reduce your taxable income by £40,000. But there are some conditions you need to follow. For instance, you must ensure that the charity is registered with HMRC or the Charity Commission. You must also keep records of your donations, such as receipts or confirmation emails from the charity. Segment number 6, gifting crypto to a partner. Yes, you heard it right. Gift your girlfriend crypto this anniversary and you can avoid taxes. According to the HMRC, transfers of assets such as cryptocurrencies between spouses or civil partners living together are exempt from CGT as long as they are not separated or divorced. Gifting crypto essentially increases the CGT allowance for civil partners and and married couples to £24,600, doubling the previous limit until April 2023. It will be even better if your partner is poor. This is because they may fall into a lower CGT bracket, potentially reducing the overall tax burden on the disposal. Segment number 7, investing in EIS or SITR. For those looking to support social enterprise and early stage businesses, investing in Enterprise Investment Scheme (EIS) or Social Investment Tax Relief (SITR) can provide tax relief. You can defer CGT and even enjoy an exemption on gains if you hold your shares for at least 3 years. And segment number 8, using crypto tax calculator. Lastly, staying on top of your crypto taxes is crucial. You can consider using a crypto tax calculator like KoinX to track your gains, losses, and potential savings. It also helps you track your cost basis, the amount you paid for each crypto asset, your disposal proceeds, and the amount you received when you sold or exchanged it. The platform supports integrations of over 180 exchanges and wallets, which can help automatically import your transaction history from them once you link it. It classifies transactions based on nature and thereby generates reliable tax reports. Hence, KoinX can help you pay less taxes if used strategically. And there you have it, folks, a comprehensive guide on legally avoiding crypto taxes in the UK. Remember, the UK crypto tax landscape is constantly evolving and you need to stay on top of the latest rules and regulations. To save crypto tax in the UK, you should act before the tax law changes and change your strategy to make the most of your crypto assets. Now, to calculate your crypto taxes and to make the process easier, check out the KoinX website, link in the bio. Also share this video with your crypto bros and subscribe to the channel.